Welcome back to the Econo Chat. Let's talk business. Of course, we have the editor of The Economist, Mr. Daniel Steinman, in studio with us. You can, if you have missed the first part of this chat, you can, of course, go to the economist.com.na website where you will have all the previous chats that we've had on Econo Chat. You can also link up to our YouTube channel, Energy 100 FM, if, of course, you want to tune in and listen to what we have spoken about previously. It is week 17, and Mr. Daniel Steinman, what is the budget? Let's just get a recap of the previous technical terms that I do not want to mention again because I might get it wrong. So let's just get a recap of the previous mentions that we have spoken about before we dive into the next.
What I said is that the most important part of the budget is the deficit, and that you have to view the government's financial operations exactly the same way that you would look at a company. So the government is a very big company, and whereas a company usually tends to make a profit, the government does not. The difference between income and expenditure is negative. We call it the deficit. It's a shortfall. It means the money has to come from somewhere, and I explained how through the bond market, by selling government bonds, the promise to pay, the government makes this form of debt very popular for any investment manager. Now, what we need to look at is at this deficit itself. Obviously, the word tells you what it means. It means that you are going to spend more than what you are going to get in over the next year. And this is exactly where we stand, and this is typical of our budget process, and this is typical of the budget processes of most of the SADC countries. The only country that from time to time runs a budget surplus is Botswana. And this is also not every year, especially not in the last 3 years, but I'm not aware of anybody else running a budget surplus. The debt market, more specifically government debt, but to a limited extent also corporate debt like a Nampower bond, they all work the same. They are called bonds, because you've got a very good guarantee that if you put your money in there, you're going to earn your interest on the stipulated day. So this is how we finance the deficit. Now, what becomes important is this question of how long can we carry on financing the deficit in this way? Because it should be common sense to most people that, again, let's take the example of a company. If you continue to make losses year after year after year, at some point you run out of capital, meaning that on your books you are insolvent. Now then you have to recapitalize, meaning that your shareholders have to put in money to make good for that deficit. Whereas with the government you don't recapitalize. You just sell more bonds. And this is now the catch. What is the affordability? Because remember, all the bonds that you sell on, you have to pay interest. So every time you sell a new bond in the debt market, you have to pay a little bit more interest. Not big amounts in terms of how budget figures go. Remember, we're talking of a budget of about 192 billion Namibia dollars. On that GDP. Now you can split that. The income side is about 58 billion and the expenditure side is about 64 billion, give or take. Now we get to the point is, what tool does an economist have to measure the affordability of the government's debt? Now you will know, Elsevier, that everybody's always got a very loud opinion and not always so very well informed opinion about the government debt. And a couple of years ago, it was 35% of GDP, and then it became 65%, and I think we are now at about 72% of GDP.
Okay.
Let me tell you now, straight here, where everybody's listening, it's no big deal. The Japanese government's debt to GDP ratio is 225%. So it means that the government owes the Japanese population 2.25 times what the economy generates in a year. This is what it means in practice. The American deficit or total national debt is in the region of about 160% of GDP, and if I make a quick calculation, that is about 18 trillion US dollars, and it's no big deal.
It's no big deal.
It's no big deal. The world, the financial markets want government debt because they.
So it has to be there.
It has to be there. It's a critical part of the economy because they all earn interest. Remember what I told you?
Yeah.
Fixed income?
Yeah.
They all know we are going to earn so much interest on such and such a date. It's a very predictable form of debt. It's not you running away for the bank. It's not the same situation that you and I are in.
Yeah.
You know. So this is a very popular thing. And now we get to that one metric, and this is the tool that I was referring. And it is usually it's a over the thumb sort of estimate that if you start exceeding 10% of total expenditure. Now remember I said some comparisons are on the income side, some comparisons are on the expense side, and some are on the GDP, the gross economy, the big economy. So this is now a comparison on the expenditure side of the government, the minus side. And it means that the generally accepted rule of thumb is that you must not exceed 10% of total expenditure to pay on interest on bonds to service your debt. But you never want to relieve that debt. You don't want to give the money back. It must stay there. It must stay in the system. All that you do is what we've been doing for the last 4 years very successfully. If a bond becomes due, because all the bonds have maturity dates, on such and such a date, the government of the Republic of Namibia must refund this list of investors 600 million Namibia dollar. Oh shucks, we don't have 600 million Namibia dollar. They don't want it. They don't want the money back. What do they do with it? If you give it back, they must go find another place to invest it in. There are not that many investment opportunities in Namibia. So what do? You roll it over.
Okay.
You reissue it. So and this is a process that they usually start a year in advance. The bonds due now, 2022, the rolling them over started last year, August already.
Okay.
So every month there's an auction to take a portion of the bond that is due at a specific date and to allocate it to the other government bonds, of which there are about 16 or 17 different bonds. So you've got many opportunities so that the investors know that they will continue to get that interest. But it's a whole repeat of the auction process. So it is not, it's not just something that somebody does, willy-nilly. It's very regulated. It's very technical. Yeah. But it's very well controlled. And everybody knows where they stand, the investors and the government. So it's very transparent, which is perhaps the most important thing. Now we get back to that thing that I said, 10% of total expenditure. We mustn't exceed that. Now here's the catch again.
There's a lot of catches.
Yes. Do you know when we exceeded that limit? In 2016 already. Does it look to you like we're shutting down Namibia?
No.
So again, the same thing. Budget economics are entirely different from all the other conventional economics. Why? Because the conventional economics is focused on the private sector. And the motive of the private sector is to make a profit. And the motive of the government is to run a country. And that is a very important difference. So the deficit can be big, can be bigger, can be smaller. And we just look at our peers. Mozambique, technically bankrupt. but we're not going to shut Mozambique down.
Can't be shut down.
Botswana, the richest kid on the block, but still a little fly on the wall compared to South Africa. And South Africa has long gone beyond the 65% debt to GDP ratio, where we also in the past year have just passed that benchmark. You see, so you have to approach budget economics from an entirely different perspective. And that is deficit, how you translate that to debt, and the affordability of that debt. And the only important thing is you need to be able to do the next interest payment on your government bonds.
Okay.
As long as you can do that, then you can continue to issue bonds and you get from the investors the money that you need to run the government and by definition to run the country. And so we must not be too concerned about this huge deficit, and we must not be too concerned about the debt. I gave comparisons.
Yeah, you did.
It's all about what do we do with that money, and we take that money and we develop Namibia. It's a sound principle.
I would personally like to say thank you for putting my mind at ease, because this deficit and this, the debt and all those things really got me like, where is this country going to? Are we going to survive? Are we going to shut down? But of course, realistically, we can't shut down. But you know what, Mr. Steinman, I am so excited to actually learn more from you, because this is very important for us on the street out there to understand what is a budget, the national budget, because it obviously brings everyone to a standstill, being concerned about the future of this country. But you've put it in a very simple term that we're going to be okay. We are doing well compared to other countries in the region, the SADC region, I should say. So thank you so much for that, Mr. Steinman. Of course, we will meet you again next week, same time, same place. And I'm looking forward.
So long, listeners.
Welcome back to the Econo Chat. Let's talk business. Of course, we have the editor of The Economist, Mr. Daniel Steinman, in studio with us. You can, if you have missed the first part of this chat, you can, of course, go to the economist.com.na website, where you will have all the previous chats that we've had on Econo Chat. You can also link up to our YouTube channel, Energy 100 FM, if, of course, you want to tune in and listen to what we have spoken about previously. It is week 17, and Mr. Daniel Steinman, what is the budget? Let's just get a recap of the previous technical terms that I do not want to mention again, because I might get it wrong. So let's just get a recap of the previous mentions that we have spoken about before we dive into the next.
What I said is that the most important part of the budget is the deficit, and that you have to view the government's financial operations exactly the same way that you would look at a company. So the government is a very big company, and whereas a company usually tends to make a profit, the government does not. The difference between income and expenditure is negative. We call it the deficit. It's a shortfall. It means the money has to come from somewhere, and I explained how through the bond market, by selling government bonds, the promise to pay, the government makes this form of debt very popular for any investment manager. Now, what we need to look at is at this deficit itself. Obviously, the word